Since President Muhammadu Buhari signed the Finance Bill 2020 into law, it has been generating mixed reactions from citizens and analysts. The new law introduces over 80 amendments to 14 different laws and took effect from 1st January 2021. The main thrust of the act is to increase the revenue base of the federal government, especially due to the economic and revenue challenges precipitated by the decline in international oil prices, as well as the impact of the COVID-19 pandemic on the economy. The key aspect of the extant laws that the bill seeks to amend includes Capital Gains Act, Companies Income Tax Act, Industrial Development Act, Personal Income Tax Act, Tertiary Trust Fund Act, Customs and Excise Duties Tariff, Value Added Tax Act, Stamp Duties Act, Electronic Transaction Levy. Other areas amended at the Federal Inland Revenue Service Act, Nigeria Export Processing Zone Authority Act, Oil and Gas Export Processing Zone Act, Crisis Intervention Fund, Unclaimed Funds Trust Fund, Companies and Allied Matters Act 2020, Fiscal Responsibility Act, and Public Procurement Act. Like every new law, the Finance Act 2020 has both drawbacks and opportunities for individuals and businesses. Let's take a look at some key changes in the Finance Act 2020.
First, it would interest you to know that not all companies are taxable. Companies with annual gross turnover of 25 million naira or less are categorized as small companies and are exempted from tax liabilities. Companies with an annual gross turnover of over 25 million naira per annum but below 100 million naira will pay income tax of 20%, while companies with annual turnover of over 100 million naira are liable to 30% income tax.
The Finance Act also exempts low-income workers earning 30,000 naira per month or less from personal income tax, as well as tax relief for companies that donate to the COVID-19 Relief Fund. Capital gain tax that was limited to 10,000 naira has now been extended to 10 million naira. Any excess above 10 million naira is liable to 10% capital gain tax deducted by the payer and remitted within the time specified under the payee regulations. The new law clarifies that for value-added tax, certain goods and services are exempted. Land and building, commercial aircraft, engine, spare part, airline transportation ticket, hire rental on lease of tractors, plow, and other agricultural equipment or implements are exempted from VAT. Value-added tax will also no longer be paid on transfer of land or purchase of a house rental as well. For frequent flyers, they are also not expected to pay VAT when they purchase flight tickets, so hopefully airfares should come down. However, the value-added tax payable by consumers have increased from 5% to 7.5%. For tax defaulters, the penalty payable for a taxable person for non-remittance within the specified period increased from 5% to 10%. For money transfers, payment of stamp duties has been abolished, but there is a new transaction levy called electronic money transfer. 50 naira will now be charged on transfer of money in a bank or financial institution on any account on sums of 10,000 naira and above. But one change in the act raising concerns is the one about unclaimed dividends in a listed company and unutilized amounts in dormant bank accounts outstanding for 6 years or more. The federal government wants unclaimed dividends and dormant funds to be transferred into the Unclaimed Funds Trust Fund as a special debt to the federal government to be managed by the Debt Management Office and shall be available to the shareholders or account holders at any time together with the yield thereon.
Some argue that dividends and bank balances are private wealth of investors, either individuals or corporate entities, and that part of the act will negate the provisions of the Constitution if people's funds and investments are converted without their consent, especially when the Finance Act did not use the word borrow. Because of mismanagement of public resources by government across levels, the fear is that the government can take people's money without any obligation to pay back.
In all, Major parts of the Finance Act 2020 looks good on paper, but whether the government will have the will, resources and commitment to see to its implementation and ensure businesses are protected from multiple taxation. Many also hope that the proceeds from taxation will be judiciously used for the overall benefit of the citizenry and not just a few.